I've been waiting to make this video for a very long time, but yes guys, I think the bull market is back. At least a multi-week or a multi-month rally to the upside could be lying ahead of us. We just had one of the biggest green weekly candle closes that we have had in months. Bitcoin is back above 21,000 and it has shown us lots of long-term reversal confirmation signals. I'm going to walk you through everything in this video. I'm going to share with you my reasoning why I think there is a very high chance we are in for some serious upside in the coming weeks and months. Smash the like button on every video, get this video out to more people, subscribe to the channel if you haven't done so already, and let's dive straight into it. So of course it is not easy calling a bottom or calling a trend change, and I've tried to stay away from that as much as possible over the last year as we've had this bear market. But there are some major signals that we can look for confirmation to help us increase the chance that this is actually a trend reversal on a larger time frame. So we're not just talking about a little scam pump that goes up a few $1,000s and then comes back down again. We're talking about a real trend reversal that could give us a bullish trend for weeks or for months. And we are basing this on long-term signals. So a couple of things that I'm going to walk you through in this video. This is a list of a few of those long-term signals. First of all, we have the dollar index, which I've made a video before on this channel. I will link to it in the description down below. There is an inverse correlation between the dollar index and other asset classes, especially crypto and the stock market. So when the dollar index goes up, the rest of the asset markets go down. When the dollar index goes down, crypto and the other markets go up. We saw this in previous bull markets. I'm going to walk you through that in detail, but this is a criteria that is very, very important. Then we have the Bitcoin weekly chart, which gives a major bullish green candle, sign of great strength. And this is off the back of a bullish divergence on the weekly chart, a powerful reversal signal. Then what we also have is we have the 3-day 50 moving average, which has finally been reclaimed with 2 consecutive closes above it, something we haven't seen happen for the entire duration of the bear market. We also have the fact that we have had more than 1 year of downwards price action in Bitcoin. This has marked the same length of time as it did in 2014 and 2018 for those entire bear markets to complete that bearish trend in price. Okay, we've had that same amount of time in Bitcoin and even longer for altcoins, because most altcoins actually peaked in May of 2021, which means it's at 1.5 years for altcoins. So that criteria is also there. So let me walk you through these steps one by one and explain to you exactly why they are so significant in helping us give confirmation that there is a high probability chance that the trend has now finally reversed. Okay, so let me start out here with the US dollar index, and you can see over here I've made these annotations on it. It's very simple. We are going to change this to the weekly chart over here. We have the 50 moving average in blue, simple moving average, the 200 in red, simple moving average. And as you can see, this goes back over the last 10 years. And what is very important to note, I bring these annotations back, is that when we are in a downtrending market for multiple weeks or multiple months, like we had the 2017 bull market when the DXY was trending down. We had the 2020-2021 bull market when the DXY was multiple months trending down. We had the 2018 bear market when it was trending up. We had the 2022 bear market over this whole past year when the DXY was trending up. And what we are seeing now is we have started to see multiple weeks of the dollar index moving down. And more importantly, what we are also seeing is we have now had a weekly close, strong weekly close below the 50 moving average. And as you can see where I've made the circles here on the chart, this was when we had the majority of the 2017 bull market. You can see we got a close below it in May 2017. As you may recall, the entire bull market really picked up steam in the last 6 months of 2017 when the dollar index was trending down. Over here, we had the same thing. We got a weekly close back below the 50-week moving average in June 2020. And as you may recall, from about late 2020 until May 2021, we had a massive bull market in crypto when this was trending down. So now we just have this confirmation again. We got this weekly close below the 50-week moving average, and again, this is what happened last time. So below the 50-week moving average is very, very good for the crypto markets, for the stock market, especially if this is going to continue to trend down for weeks and months. The invalidation obviously is if for whatever reason this reverses back up and recloses back above the 50-week moving average. That is what we have to be cautious of. If that happens, we have to reconsider the fact that this whole thing may be a trap or that it is not quite ready to start this major trend. But as long as it is below it, we have to make the assumption that we could be seeing a repeat here of 2017 and 2020. Continuation of the DXY in a downtrend is going to be very good for crypto and stocks as a bull market. Alright, so then let's move over to the weekly chart of Bitcoin. So as you can see, we just had a massive green candle. And if you go back, we haven't had a candle of that size for a very long time. You can see maybe over here in March of 2022. And of course, at that point, it did end up rolling over and end up going a lot lower. But besides that, you can see we haven't had one of these size strength candles in a very long time over the past year. And especially off the back of so low volatility, a lot of accumulation here, and a big pump back up. This is a big sign of strength. What is also very important to notice here is the fact that it came off a bullish RSI divergence. So this is a very powerful signal for spotting trend reversals. It is very accurate a lot of the time and on higher time frames. It was also there in the reverse, as you can see over here at the top. Okay, we made a higher high at 69,000 versus 65,000, but we made a lower high on the RSI, and it was followed by a year of downward price action. Now we have the same setup, but in the reverse. Okay, over the last month, since June, we built this bullish RSI divergence where the price made a lower low in price, but a higher low in the RSI divergence. Now, sometimes there can be 3 taps, so it's not always a requirement that it has to be 2 or it has to be 3. There can be different situations, but 2 could be enough to help us determine a trend reversal. We got the strong bullish move off that RSI weekly bull div, and that is simply just a sign of strength until proven otherwise. Then the third signal, and I think a very strong one, a very important one, is a reclaim finally of the 3-day 50 moving average, which is here in blue. This is a 3-day chart, 50 simple moving average. And I've explained this, I've gone through this many times before, but this is a really good bear bull indicator. If you're looking at a single indicator that is going to help you determine, is the trend now turning bullish or is it turning bearish? In my opinion, this is the one to look at because it is on a 3-day time frame, so it is still low enough in the time frame that it's flexible enough to be able to spot those moves relatively early compared to, say, a weekly or a monthly chart, but it is also not as low a time frame as the daily or the 12-hourly or the 4-hourly, so the signal tends to be more reliable. So setting the chart to log scale to make it easier to see going back over the last, say, 5 years or so, you can see how powerful this is. Once the price breaks below, it is in a bearish trend and it tends to be there for a long time. The rule is simply we need 2 consecutive candle closes above or below to confirm a trend change and make the chance of it being a fake out less likely. Okay, if we get a single candle close, it's more likely to be a fake out. As you can see over here, if I zoom in, as you can see over here, it did poke above it a little bit, but there were no 2 consecutive closes above it. We had 1 close and then it dropped back down below. Okay, so that's an easy rule to help you determine or to reduce the chance of fake outs. But let's get back to looking at how powerful this was as an indicator. Okay, so 2019, we broke back above it, right? We had a massive move to the upside, broke back below it, and we had more downside. Here, this was the only exception, and that was a little bit weird because we got back above it, things were getting good again, and this major sell-off, this was March 2020, and this was obviously very much a black swan event where obviously we had the health crisis and the whole world shut down, things were unprecedented, there was a lot of fear, and global markets just sold off, crypto sold off in a crazy way. Okay, so as soon as it got back below there, we dropped a lot. But then we got the signal here, we got back above it, and we had our entire bull market stayed above the 3-day 50 moving average. Okay, and then we got a sell signal again over here in May 2021 when it crossed below it, went there, got above it, then we had our rally to the upside, got below it over here in December 2021, and we stayed below it ever since. So while it is not a 100% guaranteed thing, you can see confirmed reversals with 2 consecutive closes above it are high chance, high probability chances of longer term trend reversals, multi-week or multi-month. And entire bull markets happen when the price is above the 3-day 50 moving average. So we had a fake out over here in March of 2022. We did not get 2 consecutive closes above it. It was one close, then back down, and one close, back down. Okay, so that was a fake out that could have been avoided by the 2 consecutive candle closes rule. Same thing happened in November. Okay, we had one close above it. It was looking like we were going to get bullish. That was the day that CZ tweeted, and the next 3-day candle close it broke down. And obviously we had the whole FTX sell-off and the lower low over there. Now, what we have is we had this first 3-day candle that closed a little bit above it, and the second one now that we just had close above it. So this counts, in my opinion, as 2 consecutive closes above it. It counts as a reclaim of the 3-day 50 moving average. And based on the data, if you go back over the years, this means that we are likely to see sustained upside. This is a medium term, at least, trend reversal. High chance that it is. And this is likely to let us see multiple weeks, if not multiple months, of upside trend. So obviously with financial markets, there is never a 100% guarantee. Okay, there's no guarantee that the bottom is in and that we are only going up from here. But based on this data, based on multiple factors that I've shared with you, the dollar index being below the 50-week moving average, the weekly Bitcoin chart coming off a bullish divergence with a huge green weekly candle, a lot of strength, the 3-day 50 moving average reclaim, the fact that we have had a 1-year bear market in Bitcoin, just like we did in 2018 and 2014, the fact that we've had a 1.5-year bear market in altcoins in price, the fact that it is now a new year, we're looking at a 4-year cycle. A couple days ago, I made a video with 3 potential scenarios for Bitcoin. One of them was a repeat of 2019, which is what we could be seeing, where we had a major rally in Bitcoin from about January till June of 2019. Bitcoin went from about $3,000 to $13,000. So if we're looking at that scenario repeating, which is starting to look more and more likely now that we've had all this confirmation, we could be looking at potentially a move in Bitcoin from about 15,000, which was the low recently, to maybe 30,000 or 40,000 or $45,000 over the next 6 months if the 2019 scenario repeats. And again, as you may know if you've watched that video, obviously that ended up being a top and we ended up seeing more downside, completely almost retracing that entire move. It went from 13,000 in June 2019 to about $4,000 in March 2020, after which we started the major bull market. So again, if we're repeating that scenario, we could be looking at a move to 30, 40, 45,000 in the next 6 months, and then maybe a complete drop back down to 20,000 or below 20,000 before the real bull market starts. But if we get this multiple months of upside, that means there's going to be enormous opportunity to make money. Altcoins are going to be pumping, meme coins, maybe NFTs, Bitcoin. There's going to be huge opportunity. So now is the time that you want to pay attention to these markets. And then, of course, you want to be sure to have your strategy in place and an exit strategy, because this could very well be a situation where we go up for multiple months, like I said, but then top and come completely back down. So you need to be prepared for that scenario where you're not just blindly holding. If things are going well, you need to know what to watch for when you want to get out, or when you want to hedge, or when you want to take some profits in the event that things start to look toppy, that if you have good profits, that you're not going to ride it all the way back down again. So, of course, I will try and update you as much as possible here on the channel. Make sure you subscribe down below. But if you really want daily updates, you want to stay in touch with what's happening on a daily basis, I highly recommend you join my VIP program. It's the second link in the description down below. Come and join there. Come and join the Discord. I'm posting charts there every day. Okay, we have over 1,700 members from around the world. We're all discussing which coins are pumping, charts, opportunities, setups, exit strategies. If you need that help and guidance, join my VIP program. Now is the time when things get interesting. So second link in the description down below. So again, logically, maybe it might not feel like this is a start of a new multi-month bullish trend. Okay, so many people are bearish. You're thinking, oh, it was just 2 months ago that FTX blew up. There's still all sorts of talks about digital currency group potentially being insolvent, and maybe more exchanges go down, all this stuff. And you know, the macro is so bad and inflation is high and people don't have money to put into crypto. But all of that aside, that is the kind of sentiment, by the way, that you feel at bottoms. It doesn't feel bullish at the bottom of a trend. And what we can't ignore is the data. Okay, simply putting emotions aside, we have all this data of long-term confirmation signals that I've shared with you. We have the dollar index below the 50-week moving average. We have this weekly Bitcoin candle that is very, very strong, coming off the back of a weekly bullish divergence that has taken months to form. Okay, we've had the 1-year bear market in Bitcoin, the same as 2018, same as 2014, that marked the end of a bear market. We also have a reclaim of the 3-day 50 moving average. These are all signals that happen very rarely. And when they do, every few months or maybe once a year, or not even, when this happens, you need to pay attention. Is there a chance that this could be a fake out? Obviously, there is always that kind of possibility. There could be a black swan tomorrow. There could be whatever craziness happens in the world. Something could completely go wrong that completely tanks all financial markets. Yes, that is one of those things you have to account into any investment strategy. But is it likely? In my opinion, no, because we have these longer term confirmation signals. And this means, in my opinion, that we need to follow the data. And if we have these confirmation signals and it's sharing with us that there is a high chance that we now have a multi-week or multi-month bullish trend, the trend is your friend. So, in my opinion, play the trend for as long as it goes until we get invalidation. And invalidation at this point, where the new bullish trend is invalidated, this only happens once we get a new 3-day candle close below the 3-day 50 moving average, which is currently at about $19,000. So if we get a new 3-day close below 19,000, below that 3-day 50 moving average, all of what I said here is probably invalidated, and we need to reassess the situation. But until then, and as long as the price is above the 3-day 50 moving average, so above $19,000 at this point, I think the trend is bullish and the trend is your friend. As always, none of this is financial advice, but I would love to hear your thoughts. What do you think? Do you think we are at the start of a new multi-week or multi-month bullish trend? Leave a comment down below. Let me know what you think. Smash the like button, subscribe to the channel, and come and join VIP if you're not yet a member. There's a full 60-day money-back guarantee, so there's no risk. Come and join, because right now, markets are starting to get interesting again. Second link in the description down below. Thanks for watching. I'll see you in the next video.